welcome to the CNBC-TV18 special. I'm Shireen Bhan, and we're in conversation with the new CEO of Cognizant, Ravi Kumar. Ravi, thanks very much for joining us here on CNBC-TV18, and congratulations on taking over in January. It's been about 4 months, and it's been quite a trial by fire, I would say, not just for you, but for the tech business in general at this point in time. Take me through what the last 4 months has been for you like.
Thank you, Shireen, for coming over to our Hudson office at Cognizant, and excited to see you after a long time. Yeah, so I joined in January. It's been a great time. I know I've gone back to the archives of the company, the history of the company. You can learn a lot out of it. There are three things which kind of resonated about what Cognizant is. Cognizant is a very young company. It's only 25 years old. Roots in India. In
fact, you turned 25
literally this month.
Yeah.
We are listed for 25 years this month, and deep roots in India. We are the second largest employer in India in our tech services space, and probably the most invested American firm in India. We have 260,000 employees. The three things which stuck to me as I curated my insights. I think Cognizant has a growth mindset, so I want to make sure that we accelerate and create growth momentum inside the firm. The second is it has a founder's mentality and an entrepreneurial spirit, and that's the reason why Cognizant has been so fast growing. And the third, I would say, is client centricity and the flexibility and the ability to co-create with clients. When Cognizant was born in 1996 to 1998, it was the tail end of the Y2K boom. And it was actually the dot-com burst. And that time, as it was getting built, it was built for the next generation of technology coming in, which is application outsourcing. And the dot-com burst was important because it left a lot of telecom infrastructure freely available. So you could do more things beyond Y2K. So Cognizant built the entire value proposition on a confluence of technology and industry, flexibility and co-creation with clients, and a huge entrepreneurial spirit. These three, if I can curate it and I can catalyze the heritage, I think we have a winning combination.
So speaking of catalyzing the heritage to ensure that it is a winning combination, what is it going to mean in terms of tangible next steps now? You have, you've already started to address that. The expectation is that with some of the measures that you've taken, you will be able to arrest the market share decline as well as grow market share. You're also in the market to add to your large deals. We've started to see some movement on that front. What is the winning strategy going to look like in terms of tangible next steps?
So Shireen, the first quarter, first earnings which I actually had for me, we had 28% increase in bookings, Y-on-Y. 30% of those bookings came from large deals. So we've created a lot of outreach on large deals. And we've created a lot of infrastructure inside the company to cater to those large deals. So I'm very confident that that runway is going to work.
So 100 million kind of deals, what could the pipeline look like potentially?
More than 50 million TCV is what a large deal is. And 30% of our bookings last quarter was that. And 28% I had an increase in bookings. It's only my first quarter, so I'm building the runway for the future. Because whatever bookings we do now will give us opportunities with backloaded revenues. The second is we want to be an employer of choice. We are a big employer in India. We want to be an employer of choice. Our attrition rates have started to fall since
from 30% down to about 23%.
It's fallen last quarter, and the trend is looking good.
So where do you believe you could be?
The quarter is still on, so I'm tracking that number very effectively. We are a company we deeply believe that we could be an employer of choice, and there are multiple things we do well. We create global mobility for our employees in India. In fact, we are one of the biggest platforms for global mobility in India. We hire from schools and build careers with inward mobility, internal mobility for our employees who can traverse the capability value chain and get global opportunities. We're a big learning infrastructure. 25 million hours of learning happened on our platform last year. We are also a very purposeful platform. Back in India, 40,000 of our associates spent almost 200,000 hours on community work, on reskilling. So there are a whole bunch of exceptionally good employee value proposition levers which actually hold for Cognizant as a company. We're very entrepreneurial. That gives ability for our employees to explore more. In fact, I launched an initiative called Blue Bolt, which is an initiative around grassroots innovation. And we want the 350,000 plus employees of Cognizant to incrementally explore more things beyond doing project work. The third, which is what I did in my earnings, is have operational discipline and simplify our operations. So what I did was I announced a program called Next Generation, where I'm taking out cost. And I'm actually transitioning my real estate to tier 2 cities in India so that structurally I can transfer those savings back to growth infrastructure and catalyze growth. And if I catalyze growth, growth is the panacea for all problems. I think it will have an operating impact on my margins as well. So I kind of created the whole, I would say, playbook. Of course, the market is very uncertain. Some sectors are continuing to be very soft. Discretionary spend is very soft.
Is it looking worse than May? Because in May you said that you were seeing clients holding back. You were seeing clients holding back on discretionary spends. The environment was looking soft. Do you continue to see that revenue softness?
There's no change in my narrative since what I have said in May. Some sectors are impacted or discretionary spend, and it's also falling off the cliff in some places.
Financial services? Financial
services is the sector. Of course, we have a huge presence in healthcare. In fact, our healthcare economy is one of the largest in the world. Between healthcare, health equipment, devices, life sciences, we are the biggest provider. That is resilient to economic cycles. So that's an advantage we have. But overall, I'm seeing a lot of large deals. Large deals come in two swim lanes, Shireen. One is cost takeout, efficiencies, and vendor consolidation. Those deals are actually more active when the economic cycles are soft. And we're seeing more of that. Then there are transformational deals which come with discretionary spend. They are much more softer. We're seeing less of them. Hopefully we can transition to them over a period of time. The smaller deals, which are discretionary spend, is very soft. So I think this is how the market is evolving, and I'm hoping that the progress we've made so far, as well as what we are planning to do for the future, I'm very hopeful that we could bring back the growth mindset of Cognizant.
By when do you believe that you will be able to get closer to your peers, if not on par with your peers, in terms of growth?
It's hard to say when it would be, but what I'm certain is bookings momentum, as I said in the first quarter, with a healthy pipeline, is looking good. I think it's a virtuous self-reinforcing cycle of employees and clients. I mean, we all think demand is what is needed, but you need a self-reinforcing virtuous cycle of employees and clients. If your employees stay with you, your clients come to you. If your clients stay with you, your employees come to you. If you're on that cycle, it's an easy business. If you're not on that cycle, it's a hard business.
Acquisitions, because as part of your winning strategy, is that likely to be a big driver as well? You've done about 4 recently. How big of an emphasis is that going to be?
So, our capital allocation policy has been stated to do acquisitions. In fact, 50% of my free cash we use for acquisitions. That's the stated policy. I have not changed that policy. I think acquisitions have contributed well to digital capabilities and gaps which we had, and we've always used that as a way to fill the gaps. I'm going to continue to look for meaningful, purposeful acquisitions which will continue to give us acceleration. The ones we did were, the last one I did was a mobility asset. Cognizant, as it built its value proposition on a confluence of industry and technology, and I told you how the heritage is. We also actually are a big platform play. I mean, our healthcare platform, TriZetto, has 2/3 of the insured population of the United States is on that platform. So I'm going to look for M&A activity either on platforms, industry domain, or gaps in geographies where we don't have a presence. You know, we are a little more dominant in the U.S. 75% of our revenue comes from the U.S. So I am under-indexed in other parts of the world, so we could fill the gaps using that. Equally, we have a huge presence in healthcare and financial services, and we have a lesser presence in other industries. We could fill the gaps using that as well. So it's a strategic tool. I'm going to use it as needed.
You know, you talked about the cost saving that you hope to accrue on account of downsizing your real estate, as well as the layoffs that had been announced, about 3,500 that you announced in May. Are you done with that, or do you believe, given the environment, more will need to be done in order to protect margins?
So we made that announcement last quarter. We have made some progress this quarter that will continue for this year. I made a conscious call to only look for structural shifts. I mean, structural shifts of cost will never, hopefully won't come back. So the two things I'm impacting is the 1% of the workforce, the 3,500 people we spoke about, that is related to non-billable roles, and we are also right-shoring some of those roles. I mean, we're right-shoring to places like India, and these are roles which are not on projects. This is not people who are on bench. These are non-billable roles. The second is, my own personal belief has been that in India, 40 to 50% of the IT workforce has moved to tier 2 cities during the pandemic. And the social fabric of India is designed in a way that people who, before they have families, they actually live with the parents. So they've gone and lived with the parents. It's a convenient model, and they have not come back to tier 1 cities. And I think the social looking at the aspect that flexibility cannot be at odds to productivity, we think we can move work to where people are. So we are actually going to move a lot of that work to tier 2 cities, and hopeful that we can tap into that pool, retain more, gain more talent, and in the process also save costs. And I also believe that 100% of my workforce is not going to come back to work. So a combination of moving to tier 2 cities and not coming back to work, we're shrinking 80,000 seats. I think we'll have enough to continue our work. And as that savings is plowed back, there is elasticity in the way we do work. I mean, our sales, our SG&A costs don't go up along with revenues linearly. They don't go down linearly with revenues. So I'm hopeful that some of that I can use it for growth. I've only announced that we're only going to do 20 to 40 basis points on our margin expansion. So I have a lot of cushion to keep that kitty with me, to use it to invest on growth. So that's my endeavor. You know,
speaking of investing in growth, the AI bet, and I know that, you've started work on that over the last few months that you've taken over. What is that potentially going to mean for you? How do you intend to sort of absorb this opportunity at this point in time? And the second, which is the challenge that the board has thrown your way, which is to diversify and bring more women across the ranks and file of the organization. How do you intend to deliver on both?
Shireen, I fully agree with my board that, growth lies in heterogeneity, and heterogeneity will come with a diverse workforce. So I'm fully committed to making Cognizant a very diverse, inclusive. We are otherwise a diverse, inclusive workforce, but we want to do more. We want to make that a differentiator for our employees and of our clients. A variety of ways to do that. Our hybrid work is going to embrace more women at work. I mean, we do believe flexibility is not at odds to productivity. So giving that flexibility will allow women to be in the workforce more. We have a large pool of women at the bottom of the pyramid. How do we actually traverse them through the journey and don't lose them on the way? There are a variety of techniques which we are applying on our workplace. Top down, we have metrics for our leadership, including the board, and right down, including myself. We have metrics for the board that our executive leadership team has to have a percentage increase in women. And that is not just me. The next 300 to 400 leaders in the company have those goals. We're also looking at ways to go to the adjacencies of our industry to bring women back. One of the things I'm very fascinated about is women who have left and who want to come back. We're almost opening up a green channel for them. So there are a variety of ways to do that. Now, coming to your question on, so we're very committed to it. We think it is going to help us significantly in the products and services we build in the market. We do believe that we have the infrastructure, the mindset, and the culture to do it, and that could be a differentiator for us. Now, coming to AI, it's a fascinating conversation. The narrative has gone all the way from literally in 3 months from what can AI do to AI will save the world to AI will destroy the world. I do believe AI is going to be the biggest discontinuity in the technology space. It's going to amplify human potential. It's going to take away jobs of the past, but it will create significantly more jobs of the future. And that bridge can only be built through reskilling. And we are at that cusp of it as a company, and we could completely capitalize on this opportunity.
So, sorry to sort of interrupt, but what will it mean in terms of things like pricing, for instance? Does it help?
So I'll quickly kind of dissect this into 2 parts. On our business model, we have a pyramid, with the bottom of the pyramid doing a lot of repetitive tasks. So when AI comes in, there is this notion that the pyramid will break. And what happens to people who have lesser skills? My own philosophy is a smart engineer will always use the tooling and instrumentation, even if we don't subscribe to it or we don't consult with them. An average engineer wants the organizational infrastructure to have the tooling for them to be very productive. 30% of the code even today is written by AI. So we think as we make engineers productive, we can create upward mobility in their jobs and take the non-productive jobs and take the repetitive jobs to machines. The second big shift for our own model, so we make more productivity. As we make more productivity, I'm hoping that we could create more prosperity and more upward mobility for our employees. The second shift, I would believe, is if AI is going to take problem solving, and problem solving is how workplaces were built since the Industrial Revolution. Problem finding, the new big endeavor for humans, will come from a cognitive diversity. We think we should hire disciplines much beyond STEM, like liberal arts, design, anthropology, sociology, psychology disciplines, which will allow us to create that amplification of machines and humans working together. So that's what happens to our business. Our clients' businesses, we have wonderful number of opportunities. I mean, the large language models or the foundation models, which are run by the big tech companies, they're not production grade. You need a lot of heavy lift. That heavy lift will come from fine-tuning the model, and that heavy lift will come from adding judgment to the prediction of the models. I mean, I'll give you an example. If it is, if you're asking an AI model to predict percentage of rain based on data, it will probably predict percentage of rain based on data. It's not going to tell you whether you should carry an umbrella. That will only happen if you are able to feed context with a set of human specialists, or specialists who can train the model. I call them the reward function engineers, or prompt engineers, as some call it. And that whole thing, that whole heavy lift will be done by companies like ours. The use case discovery, that heavy lift, making AI more responsible so that it becomes production grade, so that it can amplify human potential. So, I'm excited about the productivity lever it's going to give to our clients. I would believe our clients will go through a re-engineering. I mean, large enterprises will go through a re-engineering. And that wave of re-engineering will be powered by AI, and we will handhold, orchestrate, and partner with our clients to do that. So the opportunity is only more than before, and therefore I'm excited about what it does to tech services companies. We have taken a head start on it. We made an announcement of Neuro AI a couple of weeks ago. So I'm excited about what it does to my model, as well as what it does to our clients.
Well, Ravi, it's been an absolute pleasure. We look forward to seeing what progress you make on the measures that you've already decided to roll out, and we wish you the very best of luck as you take forward this journey. Thanks very much for your time here.
Thank you for talking to me.
Well, that is it on this edition of On the Record with me, Shireen Bhan, from all of us here. Goodbye. Thanks for watching.